Hello, everyone. Welcome to another Arizona real estate market update. This is the first long video I've done in January. It's been a very busy month for me. So like I said, this is the first long one. And these are the topics I'm going to cover. I spoke in the last few, since October, November, that Greater Phoenix was getting back into sort of a balanced market, and we were starting to see a bottom in prices. We'll have to look at more evidence that that's occurring now. Arizona continues as a leading state for immigration. There's a lot of people still moving here, and we'll go through where they're coming from and what that means for real estate prices. Arizona wage growth is above average. I don't have a chart on that. I took that out. But our wage growth is above the average. And we'll look at a chart that looks countrywide on wage growth. And that's good for buying demand in the local area. Real estate numbers are starting to verify the price bottom that I've discussed for approximately 3 months now. I started to see a bottoming in prices in the October-November period. And it's always at the beginning part of the year, and I have a chart that will go through this. The beginning part of the year in Arizona always sees an uptick in activity, and then later on in the year it tapers off. So I got a chart that shows you that. If you're looking for a home, I think really you need to stop waiting for a 2008 foreclosure event to happen before you buy. It's not going to happen, at least in the foreseeable future. A couple months ago, I looked at the delinquency rate on mortgage, and it was comatose. And the pre-foreclosures, we'll look at a chart. It's not happening. You can see a lot of news reports that foreclosures are up. And yes, they're up. They're up a couple of months, but they're up over such a low rating that the media focuses on this to get you scared. If you're looking to buy a house, don't wait for a crash. All the numbers say it's not going to happen, at least in the foreseeable future. Contract ratio is evidence of a strengthening market, and some cities are still in strong sellers market, and I'll show you which ones those are. So let's take a look at the next chart here. And this is the percent change in state population from July 1, 2021 to July 1, 2022, about 6 months ago. So you can see that the migration into the dark green states are still occurring. And in the northeast states, gosh, will the last person please shut the lights out? You can see, Michigan, Illinois, New York, they're all leaving. Many people are going down to the Sunbelt states, Florida, North Carolina, South Carolina. I just had a couple of my good friends move to the Carolinas. It's a place I'd like to live, quite frankly. And Florida, of course. Florida is a tax haven, and a lot of people are moving from the northeast to the southeast. Texas is a big immigration spot. It usually is pretty high in the numbers, but a lot of people are leaving the West Coast for Texas. They're skipping over Arizona, not really sure why. Our biggest immigration cities are like Illinois, Michigan, and New York. And California is certainly in there, but it's not the top immigration state. So we've got people moving here. That bodes well for development and real estate. So that's sort of where people are coming from and going to. So this next chart here is which states. This is another detail from a different source. This is the migration report, and we're talking about which states have seen a rush of moves in or moves out. And again, you see the same states here. Arizona on this report wasn't as green as the prior slide. I'm okay with it. I'm okay with that. We've got enough people moving here at the present time. But you can see where they're moving from on the migration report: California, Illinois, New York, and Louisiana. Those are the places I just mentioned in the prior slide. What's interesting about this, in 1996, and I'll tell you a little story. My wife and I were looking to move from New York to Arizona. And at the time, we were going to rent a U-Haul truck and move ourselves. It didn't work out that way. And I'll tell you why, because they wanted $2,000 to rent a truck to go from New York to Arizona. Now, at that time, if you're probably aware of supply and demand. At that time, nobody was moving into New York State. So it was like $200 to rent the same big truck to go from Arizona to New York, but like I said, about 2,000 to go in the opposite direction. So they just wanted trucks out of Arizona and anywhere in the state. And I haven't checked prices recently from New York or the Northeast, but I'm willing to bet they've got the same sort of issue, especially all down the East Coast. The trucks are going in this direction, and nobody wants to drive them back. So that's an interesting story, and there's a different look on migration across the US. Next chart, I want to talk a little bit here about earnings growth. And this, if you look at the dark areas, that's where incomes are growing. And the light areas down here are where incomes are falling. And, you know, this is not the greatest situation in the world, because the more mobile people tend to be the people with more money, like from New York, New Jersey, Connecticut, Michigan, Illinois. They have money and they're moving down into the southern Sun Belt down here. So you can see that their income is growing. These people are bringing money down there. You can see Maricopa County is fairly dark, and the counties in Arizona, except for the northern area, not a lot of money moving there. So you can see California, it's much lighter than sort of the Sun Belt Midwest here. So that's another cut at where the money's moving. And where the money moves usually drives a lot of stuff, which you can imagine. This next chart has, this is my assessment of the the market cycle, right? So in real estate, just like the stock market and anything else, you have this enthusiasm for prices. People buy, and then sort of prices don't go up anymore. People run out of money, and prices fall back. And then we go through this cycle again. We build from despair and skepticism, hope, belief, optimism, and then prices build again. So this is an estimate put forth by the Cromford report. And I don't disagree with this at all. This was a nice chart. It was well laid out and fairly accurate in my mind. And this is sort of what happened last year. You know, we had the euphoria early in the year, and then sort of prices topped out and sort of run down. Now we haven't gone through panic, capitulation, or despair. I think in Arizona, I think because of a number of economic factors, which I talked about a couple of presentations ago, we didn't go through this cycle. But I think, and you'll see the numbers coming up here, I think we're sort of, we got a lot of non-believers. I still get a lot of people telling me, yeah, but the foreclosure rate. I said, you know, the media does a good job of telling you the wrong things. They like to focus on shocking numbers, and the foreclosure rate is not high. It sort of varies around from month to month. And when it goes up, they just love to tell you the foreclosure rate's going up. But wait for that chart and we'll clear that up for you. And then as we move forward, hope, relief, optimism, enthusiasm, and then sort of this is sort of the market cycle on prices. Let's see. This is the pre-foreclosure rate. So I like this thing here. Stop waiting for closures to happen. It's not going to happen. These are the foreclosure rates that we experienced in the 2009, 2010, 2008 period, where you couldn't sell a house, right? We had this number of foreclosures in the system. It was just a crazy time. Most of the sales were short sales. The banks were taking in the shorts. People were walking away from their mortgages. It was a very bad time. Now, since they tightened up the qualifications for home loans, this is what's happened to the foreclosure rate. We've been dropping. Now look at this is in forbearance. This was when the COVID-19 government said you can't close on a mortgage, you can't kick your renters out, even if they're not paying. So because of that, pre-foreclosures almost went to zero, which is just an unheard of number. And you can see that we're dropping down. Now what happens is that what the media loves to do is they take this number here, which is, I don't know, 500, 600, and they compare it to the forbearance number here and say, oh my God, foreclosures are up, they've doubled. Well, you know, you can see from this chart, that's kind of a misleading analysis, right? Pre-foreclosures are low, they're staying low, and until we get an uptick in mortgage delinquencies, that chart's not in this presentation, but I look at them on a weekly basis, and I can tell you it's comatose, just like pre-foreclosure actions are. So if you're looking for a home, now's the time to buy. And let's look at some more numbers to demonstrate that. This is the contract ratio. This is as of January 7th at 9:37 and 20 seconds in the evening. Very specific here. So these are the contract ratios from this year, 2022, and you can see how high they were in the February-March timeframe. This is the time where you put a for sale sign in your yard, and you've got 20 offers to look through by 6 o'clock that evening. And you can see how it's fallen off. But it's been pretty steady, which shows that there are some activities. If you have a house on the market, you might have to wait a little bit longer to sell it, but it will sell. So let's take a look at these numbers here in the bottoms of these boxes, right? So back in October, we were at 33.2. We dropped in November to 32.4. And then right now we're back up to 33.5. So this is not unusual for the first week in January. I think this is showing a fairly solid bottom to prices. And we'll take a look at the next chart here. This is the contract ratio laid out every year since 2014. And it shows you this pattern. And I think we're going to experience the same pattern here in January. We've got this 34.9 number in January, very early in the year. And you can see what happens. So let's go back to one of these normal years here. So this is 2019. And you see how the activity started picking up towards the middle part of the year and then sort of tapering off towards the end of the year. This is sort of what we see in the Arizona area just about every year. That means you can't, that doesn't mean that you can't buy and sell a house in these periods. That means it sort of shifts and your negotiation strategies need to accommodate for the market. So this is a very good thumbnail description. It's typically advantageous to be a buyer from September through October. You can see that every year where these activities go down. Sorry about that. Activities go down. Activities go down towards the end of the year. And a seller through March through June. Early in the year, that's when it's best to be a seller. Negotiation tactics benefit a seller. So you tend to get a stronger market March through June. And I think we might see the same thing here once we get off this January, February sort of launching pad. Now, I want to talk a little bit about the Cromford Market Index. This is a great summary that I subscribe to as a realtor. And it sort of shows a balance between markets. Anything between 90 and 110 is sort of a balanced market. If it's below 90, then the buyer has the hand. And if it's above 110, the seller has the upper hand. So tune in, subscribe for these reports on a weekly basis, and you'll see this Cromford Market Index. And I can divvy this up by city. So let's take a look at this. Oh, wait, I know I want to do this first. So the Cromford Market Index is a very good predictor of future annual price appreciation. And let's look at how that works. Remember, we were talking about between 90 and 110. So this black line is the Cromford Market Index going back to 2010. And you can see here, so take a look at this. As it goes above, you know, the 110 line, it tends to predict an increase in prices. When it goes below, it tends to indicate a decrease in prices. Okay, so this was, this is typically what you would find in Arizona. It's sort of been leaning towards a seller's market, unless there are aberrations like 2008. It sort of leans, because of all the migration and money coming here, it sort of leans towards a seller's market for the majority of the time. Now, let's take a look at where we are here. We dropped below zero, just like we did back here, just like we did back here. So what does this really tell you? I think this is indicating future sales price appreciation in the 2023 time period. Now, will that occur? We'll have to wait and see. But I'm getting a feeling that when interest rates come down or stabilize, and we'll talk about that here in a couple of slides, I think you're going to see a shoot up in prices. Let's take a look at the Cromford Market Index per city. These are all seller markets at the top. You can see the seller markets: Fountain Hills, Paradise Valley, Cave Creek, Chandler. Chandler is always a popular place. And Scottsdale are in fairly strong sellers markets. They're above 110 on the Cromford Market Index. Look at Fountain Hills. That's another place I'd like to live. And it's gone, you know, up 18% over the last month. Paradise Valley. Now, there's not a lot of sales in Paradise Valley, so you got to sort of be careful about this one. But they seem to be always in a seller's market. There's lots of multi-million-dollar homes there, and people coming in with bags of money. They just want to live here. And in many cases, then they don't care what they're paying. Cave Creek is sort of the same way. Cave Creek is a little bit north of Scottsdale. Chandler, a great family town. But look at the shift in the market in Chandler. It was 88 a month ago. Now it's 121. That's craziness. It went from a big seller's market. A big buyer's market to a big seller's market. So if you're looking in Chandler it's a competition right now, but we have the homes on the market if you're interested. So give me a shout. Scottsdale is always a popular place, but it didn't move up very much, but it's in a seller's market. Balanced market, mostly the interior towns, Phoenix, Glendale, Tempe, Mesa, Avondale, and Gilbert. They're sort of a balanced market. They moved, Tempe, Mesa, and Avondale moved up fairly strongly. So that now they're sort of in a balanced market. And the bottom chart, these are mild buyer markets, stronger buyer markets, and strongest. So whereas these are all sort of in-town cities, these are more of outlying cities, like Buckeye is out there, Maricopa is out there, Queen Creek, Goodyear, Surprise, and Peoria. So people want to live closer to town. It's easier to get to the airport. It's easier to get to work. These are more remote places. They're not as remote anymore, but they're further away from the center of the Phoenix Valley of the Sun. So this is a quick snapshot of the market in these towns. Now, if you're working with another realtor or you're trying to buy a home yourself, you need to adjust your negotiation tactics for the town that you're in. I can also break down these numbers to zip codes and neighborhoods. So if you're interested in that sort of information, give me a shout. But make sure that you understand what your negotiation posture should be in each one of these towns. For instance, it would be not a good idea to go to, let's pick one here. It would not be a good idea to go to Chandler and lowball prices thinking that the seller is in pain or got to sell. I think you're going to see very solid sales in Chandler, and that's shown by the Cromford Market Index. Now, if you're looking to buy away from the interior, I think you can go to any one of these towns and be a little bit more aggressive on pricing, as shown by the Cromford Market Index. So that's where we are in towns. If you want to find the information on your zip code or neighborhood, like I said, just give me a shout, and I can do the same sort of analysis. So you know sort of where you are if you're selling or where you are if you're buying. Okay, let's take a look at the Consumer Price Index. Now, I like looking at these charts because this sort of gives me a feel for what might happen with interest rates in the upcoming 3 to 6 months. So how this chart works is that Jerome Powell has always been focused on 2% inflation as Fed promises an unconditional fight. In other words, he's going to do whatever he can do to get inflation down to 2%. Now, I don't agree with some of the steps that the government has taken as a whole, but this is trying to read the tea leaves. So this is the year-over-year inflation rate, the bars that go back to July 2021. Now, common sense would say that if the inflation rate stays at about this level, when you compare year over year, the change becomes less each time that you compare a level reading to 12 months ago. So let's take a look at where you compare this price here, inflation rate in the October period. You go back 12 years. I'm sorry, 12 months, 1 year. And every month that comparison gets moved forward 1 month. So if you take this number and compare it to this number, you'd be within the 2%. Now, we're not comparing it to this number. We would have to compare this number to 12 months forward. So you're talking about May, right? So May, if the inflation rate stays at this level, I think in May or approaching May, you could see I'm not going to quote interest rate decreases, although I think that possibility is there. I think that the pressure for Powell to increase interest rates will come off a little bit. So April, May, I think the comparisons will be better year over year. We might start approaching this 2% rate. So watch out for April, May, June, July. If the interest rates stabilize or come down, I think you're going to see an increase in demand for real estate in Arizona. And I think that will shoot prices higher. So you can go and get this information at this website, tradingeconomics.com, United States Consumer Price Index, CPI. So that's a little insight to interest rates and inflation. Let's take a look at the mortgage rate history and where we are today. So you can see that it's dropped from the 80s when we had 15 or 16 and sometimes 18% interest rates. You know, I bought my first house right in here somewhere, if I remember correctly, like the mid 80s, something like that. So I think I paid like 8 or 9% for my first mortgage. And then I've had other homes, I've had investment properties in here. But this is what happens in a recession. So everybody thinks we're going to have a recession. What happens in a recession? Interest rates come down, come down, come down, come down, come down. If we have a recession in 2023, now, who knows if we're going to have a recession? They're actually changing the definition of a recession. But if we do, I think you're going to see the interest rates come down. That might be the middle of the year, like we've spoken about. But this is where we are now. Where last week we were in the very low 6s, high 5s. And if you get into a transaction that has seller concessions for interest rate buy down, at a 2% buy down, you can get into a home for 4%, which is very reasonable. That's an unbelievable interest rate. If you get a 3-to-1 buy down, you can get down into the low 3s, which again is just about as low as they have ever been, looking at this chart. So if your realtor is not working on price concessions and interest rate buy downs, you can get my book or you can call me, and that will help you understand how they work. Okay, my next chart is a summary of the Cromford index that we talked about before. You can see the supply index has been trending down. These are showing that people are just not putting their homes on the market as much as we would like. The demand index trend, this is when I started talking about this bottoming action here. The demand index trend has moved up and it continues to move up every month. This number is from January the 8th. So the supply index is down in the green, the demand index is in the red. So you take those two together and you come up with a balanced market. And I think is a good description of what's happening in Arizona, Phoenix, that value of the sun, and Arizona real estate in the most recent past. So what's reasonable to expect in this quarter? So more listings are coming on the market in Q1. I don't think there's any doubt that that's going to happen. The evidence is starting to pile up that people are going to bring more properties to the market. Now, it's likely that those people are going to want to buy within Arizona. They might move out, who knows, but that's going to increase the demand a little bit, I believe. More price reductions by existing listings in response to new competition. So I think that's a possibility of happening. I think there will be fewer days on market prior to contract. Right now we're at about 70, depending on what town you look at. We can be anywhere from 60 to about 80 days on market, which is right about average and another indication of a balanced market. I think you can see increasing buy demand as this foreclosure picture becomes more understood. I think many people are going to say, you know what, foreclosures aren't happening. I'm not sure I believe the media anymore. And I think that's going to sort of change as the story gets out there. iBuyers have pretty much given up. They've lost hundreds of millions of dollars trying to play their, fix and flip model. So they've sold off a lot of those in the fourth quarter of last year. So they're pretty much out of inventory. And many outfits like Zillow have just declared they're not doing that anymore. And I think we're going to see more vehicle traffic in the Phoenix Valley of the Sun as winter snowbirds come here. And of course, we've got the Super Bowl next week. So I think that's a done deal. We're going to see more traffic. Okay, that's it for my presentation. Let me show you some Arizona real estate resources. I just published an online book called How to Sell Fast for Top Dollar. You can get that book at this link. I have a whole host of online resources, and my contact information is at this website. You can subscribe to this YouTube channel at this link, and newsletter subscriptions at this link. So I hope that helps. I hope you have a great day, and we will talk to you later. Bye-bye.